I think that is an incredibly intuitive question that you've asked.
Well, thank you.
So, yeah, because let's talk about that for a moment. Speculators, after months of little bit of liquidation in the gold market, where the speculators were taking profits and gold kind of just chopped sideways, they are returning with massive open interest rising again in the futures market. What open interest means is people are coming in to buy more open interest. They're buying more contracts, and prices breaking out again as we see it nearing 27 or 3,700. This is the normal link between purchasing and higher prices. Okay, to your point, and you're the first person who I've talked to in a while that's got, and that is that the silver rally right now is driven not by speculation, but I would argue this systemic short squeeze, because record high lease rates, you have falling open interest, meaning the speculators the hedge funds aren't buying. You have massive delivery demands, 58 million ounces since late August, 10,550 tons year to date. This points to a shrinking physical liquidity and mounting pressure on the market in London. London shows that they're trading 600 million ounces of silver a day, representing between 1 and 2 billion paper ounces. Claims 1 and 2 billion, and they have 140 million ounce free float backing that 1 to 2 billion claims and 600 million ounces a day. So it really means that London basically virtually has no free silver to meet rising investor demand or back the billions of ounces in outstanding contracts. And with the lease rates at that level, it's basically the risk of a delivery default in London is rising. And that is the point where I do believe that what you just said is true, that there are traders that smell blood in the water with silver, and it is being pushed up because of the falling open interest, more short squeezing than by anything else. And silver is something called a Giffen good, or Giffen good means that as prices rise, demand increases. That's kind of abnormal in investing, but shortage is even worse, because as the price rises, you'll get the industrials that say, man, we need to just jump on this now, like Tesla, because we need, so much silver and the price keeps going, let's just jump in.
Right, they got to lock it in as a hedge. Yeah.
Yes. And so, really, 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 really good question. And I would say gold's open interest is massive. That's the central bank. Silver open interest is falling a little bit, but the price keeps rising. That's a short. When you will see investor demand and industrial needs collide, the market will face, I think, that moment where there is a battle between the hedge funds and the industrial, which will massively add fuel to the fire, because the realization will be that that's exactly what is happening. And when you see the amount of silver coming in the first week of the September contract, as an example, we saw literally almost well over $2 billion worth of silver delivered into COMEX in just the first couple of days of this last week in the September contract. And again, what did I say? How much has come in so far this month? It was so far this month, the first week, because I didn't get the numbers yet for this week, 2 million ounces were delivered on COMEX of silver. So 52 times, your $2 billion right there. So that's just 1 week with 3 weeks worth of data left. This is every month. So someone or some entity with a whole heck of a lot of money is saying, yeah, we want the physical. We don't want your paper promises anymore for these reasons. Now, is it an industrial? Is it a government entity? Is it an investor? So is it someone that needs it, like Tesla or Panasonic or Sony or whatever? Or is it someone who says, you know what, we're going to stockpile this? See, the U.S. government got rid of its strategic stockpile ages ago, and they've always had to go into the open market to buy silver, even to make silver eagles. So I think it's a realization that in the end, it's about having the tools, as you mentioned, to further your society. China does that for a long time. They play the long game, and they've been buying this stuff but they've been producing gold and silver even when it was uneconomical for years, using their trade imbalance, because they understand in the end, he is not just the gold and silver, but all of the things. That's why China bought the LME, the London Metals Exchange, all the base metals. They own it, and they're warehousing these metals. They're building warehouses all throughout China that store the metals on the LME. That's why the whole premise of the Belt Road Initiative is partnering with countries that are resource rich and underdeveloped. We will develop your country, we will build the infrastructure, we get a piece of what comes out of the ground, and We're making it so you can go back and forth on not only on transactions using the bridge technology, which is being rolled out to them, which settles in 7 seconds outside of the SWIFT at a 98% reduction in fees. You can settle imbalances in gold, or you can take your gold that you pull out of the ground all throughout Africa. You can put it into a vault that will soon be in all of the countries around the Belt Road as collateral for renminbi-based loan, like a repo. And so we are getting to a point where gold and silver and commodities are becoming far more important than the paper that has been used to purchase them and to value them for a very long time. The folks in other parts of the world see this clearly. The insiders here, I think, now see it. When will that trickle down to you and I and the rest of us? Don't know. I mean, people watching your show probably have a better idea, but the people who we call friends and family, who are very well read and very intelligent, arguably just read the wrong stuff. And they are being misled and misdirected with the public, who's all in on margin, all in on leverage, on options, and all in stocks as the insiders go this way and gobble up physical assets. It's classic misdirection. It's the art of war. They're winning. Thank God someone in this administration, in my estimation anyway, clued in this President Trump and this administration to the importance of getting on the bandwagon.
I think one of the most important things that people are missing right now is that what's happening in the gold and silver markets is not about day-to-day headlines. You see the jobs report come out, you see a CPI print, you see another Fed official jawboning about higher for longer, and everyone thinks that's what's moving these markets. It isn't. What's happening is far bigger, far more systemic, and it's playing out underneath the surface in a way most people can't see until it's too late. Take gold. After months of liquidation, speculators taking profits, hedge funds trimming positions, the price chopping sideways, we're seeing massive open interest come roaring back. That's not a retail frenzy. That's institutional capital returning with a vengeance. And open interest rising with price is the normal link. People are buying contracts, prices are breaking out, and here we are, staring at $3,700 gold with the potential to move higher. Now compare that with silver, which is where things get really interesting. Silver is rallying not because speculators are piling in, open interest is actually falling, but because there's a systemic short squeeze happening in the physical market. Record high lease rates, massive delivery demands, shrinking liquidity in London. Since late August alone, 58 million ounces have been demanded for delivery. Year to date, over 10,500 tons. This isn't small potatoes. That's not your neighbor buying a tube of silver eagles. That's massive entities demanding metal. London claims to trade 600 million ounces of silver a day. 600 million. That represents between 1 and 2 billion ounces in paper claims. And yet, the free float available for delivery in London is only about 140 million ounces. That's it. That's less than 1 day's worth of paper trading. So when you hear me say London is running out of silver, that's not hyperbole. That's the math. And when lease rates spike, it means the cost to borrow silver is going through the roof because nobody wants to lend what little physical they have. That's the scent of panic in the system. And here's the kicker. Silver is what economists call a Giffen good. It's rare in markets, but what it means is that as the price rises, demand actually rises too. It's the opposite of normal behavior. When milk or gas goes up, you buy less. But with silver, higher prices spark a frenzy. Investors panic buy because they don't want to miss out. And industrial users, Tesla, Panasonic, solar panel producers, scramble to lock in supply before it gets even more expensive. So the higher it goes, the more people want it. That's the kind of dynamic that can turn a short squeeze into a runaway market. And make no mistake, the industrial side matters. Every solar panel, every electric vehicle, every smartphone needs silver. We're not talking about jewelry or coins. We're talking about the infrastructure of the 21st century. Add to that AI, 5G, military tech. All of it relies on silver's conductivity, and production isn't ramping up. Annual silver mine supply has plateaued, even as demand accelerates. When those two lines cross, falling supply and surging demand, you don't get stability, you get chaos. Meanwhile, the West continues to mislead its citizens. Look, even friends and family who are highly intelligent, well-read people, often read the wrong sources. They're being misdirected. They're all in on stocks, on margin debt, on options, the most dangerous leverage in history. And while the public is all in, insiders are going the other way. Central banks are hoarding gold. Sophisticated investors are demanding physical silver. The art of war is misdirection, and right now it's being deployed against the average investor in the West. Contrast that with the East, where the long game is clear. China has been subsidizing gold and silver production for years, even when it wasn't profitable. Why? Because they understood the endgame. They bought the London Metals Exchange. They've been building warehouses across China to store base metals. They control a majority of global solar production, which requires silver. And through the Belt and Road Initiative, they've struck deals with resource-rich developing nations. We'll build your infrastructure. You give us a piece of what comes out of the ground. That's how you secure long-term dominance. And it's not just physical metals. With eBridge technology, China and its partners are rolling out settlement systems that bypass SWIFT, settle in 7 seconds, and cut transaction fees by 98%. And they're offering gold settlement as an option. Think about that. Instead of sending dollars through New York, you can settle trade in gold through Shanghai. That's not a conspiracy theory. That's a fact. That's the infrastructure being built right now.
The United States being a net importer of metal has never happened. An administration who continues to drop clues and hints that gold and silver are certainly, whether it be reclassified as a strategic mineral or the comments, Trump, he who has the gold makes the rules, Besant being a self-proclaimed gold bug. We've talked about Judy Shelton, or Senator Lummis, all of the things about gold revaluation. The Federal Reserve just wrote a report on it. Everything that's happening with the BRICS, and this is something that should not be overlooked, and they are massively tied to gold. The fact that now the rumor about everything I was talking about with the expansion of the Shanghai Metals Exchange and the settling in gold outside of the trading in local currencies over Enbridge, they're now talking about the rumor they will have a gold-denominated repo facility that will be part of the Shanghai Metals Exchange, where you will take gold and use it as collateral with metal held in the Shanghai Metals Exchange and in the series of vaults that are now being built all around the Belt Road. The next one is being built right now in Saudi Arabia, which is very symbolic, but using it as a repo facility for renminbi-based loans where, all of a sudden the Chinese in the Belt Road Initiative, who are trying to help build this ecosystem amongst all of these underdeveloped countries, will take gold as collateral for loan for repo. Repo is typically associated with giving liquidity to the worldwide market by exchanging treasuries for cash and then being able to buy them back at a later date at a higher price. If you can now switch that to gold, my point is that I truly believe we are just getting started. I truly believe with the passage of the Genius Act and the passage of a synthetic demand for U.S. treasuries, we have entered a new monetary system, and gold will be part of it. Silver will follow. Should you take profits? Sure, it's not a 4-letter word. You certainly could. Would I personally? No, not yet, because I've never seen a market that behaves quite like this one does, with the fundamentals that are growing at the highest levels. And I guess what I would simply say is that when like I said, the people running the money printers are buying gold, the central banks, you should pay attention. When the most sophisticated institutional traders in this country go from net sellers to net buyers, you better pay attention, and it's just beginning. And then the U.S. government comes in and says silver's now a strategic mineral. That's just a floor been put underneath the price of silver by the U.S. government. And the massive imports coming into the United States, I would argue there's a floor under the price of gold. Ultimately, I think gold will be tied to a new system, a new monetary system. It will be definitely tied to one in the global south, and I think it will be tied to the treasury market here, a floor underneath the price of gold. So in my mind, this time is different. There's nothing wrong with taking a profit. It means you've won. But I would say that I think this, you'll look back at it. Look, let me put it this way. Goldman came out and said if the market even thinks the Fed loses any bit of its independence, you'll see gold at 5,000 like that. Does anyone believe the Fed is independent anymore, with Stephen Miran, the architect of the Mar-a-Lago Accord, now being put into the Fed, and the pressure that Trump is giving, and all of a sudden they talk about bending to 25% or 50% drop tomorrow. The Fed has lost its independence, which is nothing new, by the way. You go back through history, the Fed and the president have been intertwined more than you would think. They're telling you gold's going to go higher. And you look at a guy like Luke Gromen, who's as smart as anyone in this industry. He said, yeah, they're going to let gold go much higher, slowly, organically.
You know, I've been doing this for over 3 decades, and I can tell you honestly, I've never seen a setup like this. Not in 2008, not in 2011 when silver screamed to 50, not even in the late 90s when gold was left for dead and trading at $250 an ounce. This is different. This isn't just another bull market in metals. This is the beginning of a new monetary order. And I don't say that lightly. The United States has boxed itself into a corner with decades of reckless fiscal policy. We've become a net importer of metals. That's never happened before in our history. Think about that. The richest nation on earth, the one with supposedly the deepest capital markets, now has to import the very metals that underpin its own strategic industries. That's not strength, that's weakness. That's fragility. And at the same time, you've got an administration, call it Trump's or anyone else's, dropping hints left and right about gold and silver's role. Judy Shelton floating gold revaluation. Senator Lummis hammering away about Bitcoin and gold as parallel systems. Trump himself saying, he who has the gold makes the rules. These are not accidents. These are signals. They're preparing the ground for what's coming. Now let's talk about the Shanghai Metals Exchange rumor, a gold-denominated repo facility. If that happens, it's a game changer. For decades, the backbone of global liquidity has been the U.S. Treasury repo market. Institutions park treasuries as collateral, get short-term cash, rinse and repeat. It's the oil in the machine of global finance. But imagine if that collateral shifts from treasuries to gold. Suddenly the Chinese, through the Belt and Road Initiative, are offering loans backed by real money, not paper promises. Saudi Arabia is already building a vault to participate. That's symbolic. That's history turning. And this is exactly why the LBMA and COMEX are on the ropes. For too long, price discovery has been dictated by paper contracts in London and New York. They've sold the same ounce of silver 100 times over, confident no one would ever stand for delivery. But now they are. Central banks, sovereign wealth funds, billion-dollar entities, they're demanding the bars. They don't want your paper promises anymore. They want the metal. And when that tide shifts, when price discovery moves east, all the suppressed energy of decades comes exploding out at once. Here's what people don't grasp. It doesn't take everyone waking up. Less than 1% of the world owns physical gold and silver. If that number creeps to 2%, the system blows. The paper games unravel. That's how tight the market is. And let's not forget what Goldman Sachs said just recently. If the market even thinks the Fed has lost its independence, gold goes to $5,000 overnight. Well, do you think the Fed is independent? With Stephen Mnuchin, the architect of the Plaza Accord 2.0, being floated for Fed leadership? With Trump openly pressuring Powell? With the Fed's balance sheet ballooning every time Wall Street whines? Come on. Nobody believes the Fed is independent anymore. And if Goldman is right, we're staring down a repricing of gold that will shock people. But it goes deeper. Luke Gromen, one of the sharpest minds in this space, has been saying for years that the endgame will be a gradual, controlled revaluation of gold to recapitalize the system. Not a sudden Bretton Woods conference in a fancy hotel, but an organic process where gold is allowed to float higher and higher until it can once again backstop sovereign debt. And guess what? We're living that process right now. The higher gold goes, the stronger the balance sheet of any country that holds it. That's why central banks are buying it hand over fist. And here's where the misdirection comes in again. While the public is piling into meme stocks and chasing crypto ETFs, the insiders are gobbling up physical. The central banks bought more gold in the last 2 years than at any time since the 1960s. That's not retail. That's not Reddit. That's serious money preparing for serious change. Now silver is the wild card. Gold is the linchpin of the system, but silver is the leverage. And as I explained earlier, silver behaves like a Giffen good. The higher it goes, the more demand accelerates. Tesla doesn't care if silver is $40 or $100. They need it to make cars. China doesn't care if silver is $50 or $200. They need it to dominate solar production. And the more the price rises, the more these industrial giants will panic to secure supply. That's when the investors collide with the industrial users. That's when fireworks happen. And don't kid yourself, the US knows it's behind. That's why they reclassified silver as a strategic mineral. That's why they're quietly importing record amounts. They're not doing it to mint silver eagles. They're doing it because they know what's coming. They're trying to secure what little they can before the music stops. Meanwhile, the media keeps the public distracted. Inflation's transitory. Debt doesn't matter. Stocks always go up. It's propaganda, misdirection, the art of war. And while you're looking one way, the insiders are moving the other, piling into physical assets that will survive the storm. Let's zoom out. Every fiat currency in history has failed. Every single one. The dollar will not be the exception. It's already down over 90% in purchasing power since 1971. Your grandfather could buy a house for $4,500. Today, that's a down payment on a used car. That's not prosperity. That's theft. That's the degradation of money. And here's the reality. When fiat dies, people return to gold and silver. Always. Why? Because gold and silver are money. They're not promises. They don't default. They don't need a counterparty. They just are. And that's why when this reset comes, and it's already here, those holding physical metals will be the ones who preserve their wealth, while those holding paper claims will be left in the cold. Think about London. Kitco reported they've got 140 million ounces of silver in free float. That's 1 day's worth of paper trading. 1 day. And they're trading 1 to 2 billion ounces in contracts. That's a powder keg. All it takes is one serious delivery demand they can't meet, and confidence collapses. And when confidence collapses in a market built on confidence, the whole edifice crumbles. That's the risk of a default. That's the risk of a squeeze that can't be contained. Now let's talk politics, because you can't separate markets from politics anymore. Trump has made no secret of his affinity for gold. Whether you love him or hate him, the fact is, his administration is openly laying the groundwork for gold's role in a new system. You've got Judy Shelton floating gold revaluation, Lummis pushing sound money, even whispers of tying treasuries to gold to restore credibility. Meanwhile, the Fed's credibility is evaporating by the day. And look around the world. The BRICS are building their own architecture. New exchanges in Moscow, St. Petersburg, Shanghai, Riyadh, Singapore. These are not paper casinos. These are cash and carry markets. If you buy gold there, you take delivery. If you buy silver there, you take it home. No games, no 100-to-1 leverage. That's the future. And when those exchanges set the global price, the LBMA and COMEX will be irrelevant. You want proof? Look at premiums in China. Silver trades 10% higher there than in London or New York. Arbitrageurs are already moving metal from west to east. That's the market telling you where real price discovery is happening. It's not in London anymore. It's in Shanghai. It's in Riyadh. It's in the places building vaults along the Belt and Road. So what do you do? Look, I'm not here to give you personal financial advice, but I can tell you what I'm doing. I'm not selling. Not yet. This is just getting started. Could you take profits? Sure, it's not a 4-letter word, but I believe this is the beginning of a once-in-a-lifetime reset, and selling too early would be like leaving a championship game at halftime because your team is ahead. The real fireworks are coming in the second half. And here's the thing. The people who act now will be the ones who look back and say, "Thank God I didn't wait." The people who dismiss this, who believe the propaganda, will be the ones blindsided when gold revalues overnight, when silver gaps higher in a short squeeze, when the dollar is sidelined in trade settlement. We are watching history unfold in real time. The Fed losing credibility, the dollar losing its reserve status, the East building a gold-backed infrastructure, the West drowning in debt and denial, and through it all, Gold and silver are the constants, the anchors, the only real money left. So I'll end with this. Don't let the misdirection fool you. Don't let the media lull you to sleep. The insiders are not confused. They know exactly what's happening. They're front-running the reset with physical gold and silver. And when the dust settles, when the new system is in place, it won't matter how many shares of Tesla or Apple you own, or how many dollars you have in the bank. What will matter is whether you hold real money. And that's why I keep saying, this time is different. This is not just another cycle. This is the end of the old system and the birth of a new one. And gold and silver will be at the center of it.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.